Ladies and gentlemen of the crypto space, we're live on a Friday, June 24th at 11:38 a.m. This is a nice stream today. It's a rare treat in the last couple of months at this point, where we've had very consistent and not predictable but expected bearish continuation. We finally get a chance to talk about the state of protocols and what they're offering and what kind of cash flow these protocols are dealing with. What are their balance sheets like? And most of the balance sheets are actually ridiculously healthy because there's little to no debt on the vast majority of these enterprise balance sheets. They literally have no overhead, no human resources, well, limited human resources, but so on and so forth. But they're cash flow positive, and the protocols are making revenue, and they have no damn debt. So it's a fascinating offering that we see presented to us in the crypto space as compared to traditional uh, corporate markets as experienced through equities. There's so much debt in the equities markets, and there's almost no debt in a lot of these protocols. And we're going to look over three protocols today. We're going to look at some protocols. We're going to go. It's not. I guess it's out on the risk curve, but we're going to entertain three protocols that have been doing quite well. And that's refreshing to see. In a sea of all this catastrophe, all this macro cataclysm, all this horror from a global financial perspective, but through all of this, I'll drop little hints on how I'm performing in these markets, and it's quite nice to see. We've said measure from the bottom, and I'm quite satisfied with how things have played out over the last couple of years. So, a little macro context. Jurian highlights it very nicely on this chart. There's years where there's bearish market activity, and and it's just been bullish market since 2010. And it's just so obvious on the chart, on this long-term chart back to 1871 for the S&P. And it does look like, you could still have a couple more years. We were bullish from 1982 to the top in 2000. It just kept going up and up. Um, but markets do change, and we have these secular bull and secular bear periods that last a decade or more. And where are we? And that's why we talk on this stream and compile the narratives of persons like Lynn Alden and Luke Gromen, and we can set, like what Jeff Snyder talks about is really like the insanity of the market and things that could cause very disruptive market events. But that's not really like long term. Jeff's content doesn't really talk to this type of chart, for instance. That I would say both are meaningful to have an understanding of where we are in the markets. Folks have two perspectives to consider: short term and long term. This is obviously the long term perspective, but clearly, if you buy in a secular bear, it could be a decade before it turns into a bullish market. Um, but Jeff's highlighting lately that the system is very well positioned to have an extreme liquidity event. The T-bill market, as Stephen Van Meter points out, is tight. There's basically no liquidity, and the euro dollar curves are completely inverted. They're horrible, which means people are betting basically that something's going to break. And what do we see right now in the market today? Some nice flooring patterns. We see inverse head and shoulders. We see higher lows. We're seeing some green. Um, it's hard to really wrap your mind around short term compared to long term. Short term, everyone wants to find an entry for a long term play. But you don't want to see stuff go down in the short term because everyone likes to see number go up, which is kind of like why I've come to this way I manage the portfolio. And I kind of like to ignore exuberance to the upside. Let's look at the BTC chart in that regard. So if you measure from the bottom and you ignore the exuberance, it's kind of like what I do with the portfolio total valuation. if you ignore all of this, the chart's remarkable. I mean, 5 years, well, four and change years since the last high. We breached the high. We had a period of irrational exuberance. It could be whatever. It could be, let's say, something like this, something less insane. I would like that to cover, damn it. Anyway, so imagine all this exuberance is blacked out, and we just have the white line. So we pushed through the high of 2017, December 2017. So it was a breakout, a retest, and a previous resistance, thus far holding as support. Sure, the exuberance skews it from an observation standpoint, or from not it throws it off. It throws it into like types of conversation that would be like perverted. Like, why is it behaving like this? But that's not what's pertinent. What's pertinent is, after all these years where people never thought it would go back to this high, it has shown support. People are buying at a price where everyone sold. Everyone sold. Everyone sold for years until 2020. From December 2017 to 2020, it was this bearish, secular, bearish market from a moderate long-term perspective. But now people are entering. And look at this 50 SMA in the monthly. That's a wonderful, wonderful support moving average, or a moving average that's expressing a region of price action support. Sure, it wicked down significantly below, but people are buying it. They're supporting it at $20,000. That's incredible to see. There's so much. It's not about FUD. It's not because the FUD is right. There's reason to be fearful of a chart that goes like this, that behaves like this. So there's reason to have fear, uncertainty, and doubt. But what we've done on this stream is we try and peer through the madness, the insanity of these markets, and see, is there something? And I overwhelmingly see something significant and meaningful. You just have to get through the irrational exuberance. And look, the black box helps you peer through it. After all these years, after all this selling, after all this market action in the equities markets and all this shit from the Fed and the fiscal printing of 2020, people are buying when in 2017 everyone started selling, and they didn't stop selling until the beginning of 2020. People are buying where they once sold. A lot of support right here. This is an incredible candle on the monthly. So we're going to talk about 3 fun protocols. I could always mention QiDao, and it's finally found the bottom. It's at about 32 cents, which is good to see. 34 cents. I think it was at about $1.70, but it bottomed, I think, at 20 and change cents. But that's finally doing better. That's good to see, because it prints some very nice returns. And what I love about that protocol, one, it's a Eurodollar. It's a CDP, a collateralized debt position. It has overtones of Abracadabra and MakerDAO. This is QiDao. I'll never get the name right, but whatever. You guys know the protocol I refer to, and it prints very nicely. My position has finally gone back above $50,000, and it prints a couple $1,000s a month. And that's nothing to complain about. And it's what is so important that I want to remind everyone, it's so imperative to be humble. And look at this chart. We have the Bitcoin chart up. And during this period of insanity, the numbers were wild. You saw massive, massive yield, and cash was just being flown everywhere, and prices were through the roof, and your portfolio was vertical. But that's not where it is right now. Where it is right now is trying to assess what's real and what survives. And if a protocol like QiDao is producing a couple $1,000s a month off of a $50,000 position, that's extraordinary. That's like 50, 60, 70, 80% returns, which means that probably has a meaningful survivability likelihood. So I like what I see going on over there. They perform better than Abracadabra. They have a different model, but they're on more chains. The stablecoin, is on many more chains than MIM. And stablecoins, as I've told you guys, are probably the most important narrative. One of the most important narratives in the entire crypto space. So much FUD thrown around about stablecoins, but it's so meaningful. Why? Because now we go back to Jeff Snyder and what the Eurodollar system is. And even Jeff has talked about stablecoins. There's a crushing disinflationary pressure on the global currency supply. So that's why these protocols have caught my eye. They do the same thing as a Eurodollar, except they're digital, they're permissionless, they have innovative, attempted innovation with regard to monetary policy and capital controls and MMT, and I love all this shit because you get none of this with equities. What you have is a hope in equities that a board makes good decisions. They do share issuance and dilute the shareholders to raise capital, to do something big, to generate more money. And I find that so annoying compared to these types of enterprise. These are enterprise. These are the same thing. These protocols, not Bitcoin right now, but we could look at any of them. Convex, Curve, we could look at Aura and what it's doing. These are enterprises just like a stock, except they're a digital enterprise. It's a piece of software. They have different human resource requirements. They have different overhead, different capex requirements, different sources of revenue. But in all regards, these are enterprise. So you see all these folks from TradFi being critical of the crypto space because the vast majority of shit literally just went vertical and then crashed and burned, but they never saw the enterprise. And that's why I always remind you guys to peer through the madness. There is legitimate enterprise in this godforsaken space, this wild west of experimentation. Let's hit some comments, but I'm going to look at, we'll talk about Aura. I want to talk about hash flow and even multi-chain, because that's an interesting topic, especially with the likes of router protocol, and Stargate, which is built on, I don't have the URLs, but Stargate, which is built on layer 0. And layer 0 crosstalk. So router's doing something interesting, which is the same thing as Stargate. And multi-chain has a cross-chain messaging component, but they also have their custodial bridges. And obviously with the Harmony bridge exploit, there's your fear associated with centralized bridges. There's only 24 nodes. But look at this. The scope of multi-chain is huge. They have such a first mover advantage. So I'm still trying to process where they fit into the future. Like, is the future just layer 0 and router and cross-chain messaging? Or is there something to, cross-chain mint, like a custody, pools, and a tokenized representation, which is like what you see on Avalanche with USDC.E, the tokenized version. And the native version. So it introduces complexity, but look at these numbers. Look at the fees, the users. I mean, these are not large numbers like from a macro financial perspective, but these are quite meaningful. Thousands of users, 16,000 people on a weekly basis. You know what 16,000 people look like in a stadium? It's a lot of people. I mean, clearly, if the U.S. has like 360 million people and there's, 7 and change billion people, however many billion people on the planet, this is basically zero. But that's the territory we're in. We're trying to figure out where the next millions of people will start to operate. And that's when these numbers go to enormous levels. That's the speculative component of looking at these protocols. and seeing what they're capable of. Oh my God, my phones don't stop vibrating. I literally have to mute my phones. Give me a second. Let's do some comments and we'll go over 3 protocols. We'll take a look at Curve and Convex because they're doing very well as well. Dan's in the house. Good morning. Raul. Hello. Risky Crypto. Killis is in the house. You were too kind to remember I hadn't been on for a while. Yes, been off the grid and on. Still do playbacks where I can. Yeah, I mean, all these videos over the years, I think there's over 600 streams over the last couple of years. Quite wild what we've built. DeFi Jangles in the house. Finally able to catch a live stream. We got some good content today. Some stuff to smile about in a very unfriendly macro environment. Vetso, no, I see a tab open on Aura Finance. What are your thoughts on it? So these are complicated questions. VL Aura or VE Bow. It's kind of like trying to figure out what's going on from a convex curve perspective. That's what is tantalizing. It's not that it's different. Clearly, there's different monetary policy from a balancer perspective, but Aura has the precedence, the history of what Convex did. And I'm sure they were thinking about Convex when they constructed Aura. So I think it's interesting. Clearly, there's not much volume. There's not much volume on Balancer compared to the top 3, which is Uniswap, Curve, and 1inch, which is an aggregator. Synthetics that's why Synthetics price is bumping. Synthetics is bumping. Synthetics is an interesting cash flow position because Synthetics is a primitive. Synthetics is a stablecoin, by the way. SUSD. Synthetics was the first. In many regards, they're very much a pioneer. And what's happening is protocols on Optimism are finally getting off the ground. Optimism is finally getting off the ground. So there's velocity building on Optimism. And that's where SUSD is going to get leveraged, or SNX is going to get leveraged to create the SUSD. SUSD is a debt collateralized by SNX. And SNX surfaces cash flow, surfaces a lot of cash flow. Look at all the volume. SNX is surfacing cash flow from $234 million a day in volume through the protocol. And Balancer is perking up. This is very interesting. I would love to see 0x hang in there. Poor Bancor. Bancor's has had a bad run. But this is very interesting to see. Uniswap, that's just big corporate. There's literally zero opportunity whatsoever in Uniswap. Maybe from like a massive corporate perspective where you're a market maker and you do professional LPing, whatever. That's not for us, especially not for the content we talk about or the scale and scope of what we deal with our portfolios. So we could completely neglect Uniswap from an opportunity perspective at all. Curve, we know the story. Curve has been extremely productive in these bearish market conditions, and I'm quite liking what we're seeing in the chart. It's nice to see it above the TWAP again on the daily. Clearly, it's very early finding a bottom, but it's nice to see potentially a bullish engulfing on the weekly. There will be a bottom. There's always a bottom. Is there any more liquidity to flush? Is there any more leverage in the system? With 3AC pulling what they pulled, and Celsius popping, and BlockFi popping, and Voyager popping, and oh my God, the amount of leveraged, amount of degenerate leverage at these multi-billion-dollar levels exploding is extraordinary. It collapsed the markets. Did what it did to Bitcoin, and the Bitcoin cascade overflowed right into the altcoin market. But price action does not invalidate a narrative. It's only a component of the analysis. And this chart looks healthy. Look, unfortunately, we have to chalk all this up to exuberance. Because what do we have? We have a higher low. That's it. That's it. It's just a higher low. Let's go out to the monthly for a better perspective. It's a higher low. Even the lowest wick at 53 cents, wild number, is a higher low compared to the 30s, 32 cents. We're at bottom. Very different market conditions, very different conditions for the protocol. where it bottom bounced at 52 cents compared to what was going on in the hyperinflationary decay back in November of 20, about a year and a half ago, give or take. So I have my high opinion of Curve, thus it's the core of the portfolio. You guys all know that. I've been criticized. Why do I love Curve so much? Why do I love Curve so much? Because it's proven and it's created the moat and it's created the precedence for the Federation. And the Federation is very much holding. Nice to see Convex find some bottoms as well. This looks like a decent cup and handle. Let's see if this TWAP holds on the hourly. I'd like to see it get back into some sort of trend formation. It broke down from this falling wedge. That was a decently structured falling wedge. So maybe this is a relatively long duration fake out breakout where it falls down. That's a big fall, big fake out breakout if this breaks out from here. That's a common pattern, the fake out breakout pattern. This is a falling wedge and it falls down and it pops back up. All the while, Curve and Convex are still extremely productive. But look, Curve and Convex lead the conversation to what folks have asked to talk about, Aura. Aura is a convex, Balancer is a curve. And clearly, if we go over to the chart for Aura, people have figured that out. Took a nice position down to down here, about 68 cents. It was very quiet when I took the position. I took a small position. It was a very small position, but it's up 100 and something percent. That's very nice. I don't feel comfortable with macro conditions to really take a larger position, but I'm sure a lot of people took, half $1 million position and probably are not even necessarily going to sell. Maybe they see, the curve, the Federation building with Balancer and the reflexivity that Aura will offer, that will turn BAL into a disinflationary, at worst case, at best case, a deflationary um, uh, printed asset. And then it's the MMT money printer conversation that we have with regard to Curve that's potentially playing out with Balancer, where BAL is used to incentivize, it prints, it's inflationary in the short term, but at net, because of the federation of protocols, they want to control that inflation, that commoditized inflation. The net effect on circulating supply is either disinflationary or optimally deflationary. So this is very early stages. There's no way I would buy into it at this price. If it falls back down, which it may not, I wouldn't buy this at all. I'm not good at price targets, but if it falls down to down at all, I'd probably nibble at a position and add to what I have. It's not the largest position. So I bought 10,000 Aura. Vote locked on VL Aura on the lock page. 0.56% of available supply. It's pretty cool. And it's nice to see that BAL is just behind Synthetics. Synthetics is an interesting position. Maybe I'll carve out a little bit. But now we're heading into the territory of the conversation we've had. Don't go all in, don't spread too thin. Are we getting tempted to spread too thin? We see Synthetics and it doing what it's doing. It's got all this volume, it's producing cash flow. We see BAL with the potential emergence of a federation. Oh, it's tempting. We see HashFlow, which uses layer 0, which actually it uses Stargate for cross-chain swaps. We see router layer 0 and multi-chain doing cross-chain messaging. And what's the future with regard to cross-chain messaging versus custodial and tokenized mint or tokenized representation? So we're heading down the road of what we've gone through over the years. Is there's a lot of very meaningful technological opportunities. So don't try and get overwhelmed, or don't get overwhelmed, and try and remember that you don't have to own all this shit, but it's good to know about it. It's good to know about it. Do you buy if you have 10 grand, do you buy 3 grand of Aura, 3 grand, put 3 grand into an LP position, crank it out 40% returns, and or do you put 3 grand into multi-chain, a lock multi-chain position, which is cranking out 190% returns with USDC as the incentive? And what about VE Joe? Well, not VE, but Trader Joe XYZ, which is interesting as well. S Joe, S 18% in that pays in USDC. That's always been a little interesting. I've kept my eye on it. I don't know. It's hard. It's hard to make these choices. And personally, what have I done? I've done very little. I nibbled on the aura, and I focused on. I did buy that additional curve position a couple weeks back. Tempted to snag another little bit of curve, but I'm just gonna wait. I'm just going to wait for prices to get higher, and then I just won't buy because the prices are too high when they went up. No one buys when the damn prices are down. They buy when they're going up. Anyway, so I hope that helps, Vetso, regarding Aura and Bow. People might get tempted for like a VE Bow, which or an Aura Bow, which is interesting. It's just tempting. It's all tempting. All this shit is tempting. But what survives is most important. I'm not too much of a fan of providing LP, so I'm more interested in either a base VE bow position for the same reason I'm interested in a VE CRV position. I'm not tempted by the derivative, so Aura bow would be a derivative. So that's something that I always keep in my mind that helps me concentrate what I look at. The derivative is gonna have the effect that all the derivatives of VE curve have, and it's going to be a positive, a boon on VE bow. And VL Aura is VL CVX. So play it the same way we play convex and curve. And doesn't mean you have to have the same position sizes. This is much newer. So there's much more risk. Greater the risk, greater the return, but greater the risk means you could also, it doesn't work. It doesn't become what we're speculating it to become. Maybe macro conditions crush everything again and we have another massive leg down, another 50% loss in the market, and then folks will wish they didn't buy anything. Which is why now more than ever, and especially heading into subsequent cycles, the next cycles, gotta carve out cash. And you got to remember the narrative we talked about with regard to the pizza shop and modeling this shit as businesses that produce income, and that income needs to be in cash. So you get your weekly curve, be it from here, from a VE curve, if that loads, or be it from a bribe on Vodium. Convert it to cash. That's your cash income. That's just like you getting a paycheck at the end of the week. And then you can make a choice. After you have cash in your bank account, then you can make a choice between 1, keeping cash in a bank account, 2, paying bills, and 3, investing. But you can't, I'm not a fan of the compounding. I'm not a fan of necessarily the derivatives, of like the union derivatives. I'm not a fan of these. I'm more of a fan of the business modeling. At the end of the week, you got income. Don't just think of this stuff as investing. Why? Because everyone does that. Everyone thinks of this stuff as investing. And that's not what everyone doesn't succeed. So a good part of what I like to do with myself and the content that I produce is to try and teach people a different way of looking at capital management. That's why we've talked so much about the business modeling and model it like an income stream. Primarily because it's different. It's not the same as the way everyone looks at this shit. Scott, I hope that helps with Aura. There's not much to look at, but everything that you're looking at, and you're probably trying to digest what to buy, and that's what everyone's trying to digest. But I hope what I said, comparing it to VLCVX from a VL Aura perspective, or or a VE Aura from a well, VE Aura is kind of like what, CVX CRV, and I like the VE bow. So I have a VE bow position, I have a VL Aura position, and they're small. They're probably 90% less, 10% the size of, much less than 10% actually. It's a 2% position, 2%. So I have 2%. My VL Aura position is 2% the size of my CRV position. It's about 10. My VL Aura position is about 10% the size of my VL CVX position. So that gives you some context into what I'm thinking. Whether what I'm thinking is the best way to do it, I don't freaking know. But context helps people make decisions, so I hope that helps. Kaizen, Aura's doing great. Put a smile on my face today. Very excited. What comes after Balancer? Yeah, I expect the Federation to build. I expect more interest, more excitement, more attention on the capacity for BAO to be commoditized and the inflation to be commoditized. Why? Because that's exactly what we've seen play out with Curve and its federation. Now, Beethoven's involved in all of this, and they have a bit of a federation. They have a bribing system. But as of right now, I believe, from what I see, Aura and Hidden Hand have leapfrogged, have done better at the bribing, the incentivized voting mechanism than Beethoven has, because look, it's a unified interface. So this makes it very simple for a protocol that has assets to, in a capital efficient way, incentivize deeper liquidity, because it's a consolidated user interface. And Beethoven didn't really have this, and Phantom was a little bit of a mess. And so it's good to see that Beethoven's trying to get in on this, and this is what happens. This is the organization of a federation, trying to find the strategies that work. And that's not personal people trying to find the strategies that work. These are protocols trying to find strategies that work for them, such that their monetary policies and their capital flows are sustainable. So I like what I see between Aura, Hidden Hand, and the base positions, VL Aura and VE Bow. And I would see stuff like this as a red herring, because this is going to expose you to an LP position, BOW, WETH, so there's impermanent loss. And I don't want exposure to LP positions like that. But I like to see these numbers because I know so many people are going to be influenced by these numbers. And that's going to cause them to be engaged. And maybe they'll do good, maybe they'll do better or worse, but I don't care. Everyone has to make their own choices, but I'm not going to be red herringed into this. I'm going to see this as something that's going to affect the base positions, the fundamental positions of a VE Bow and a VL Aura. And those positions are interesting because we're put them into context with VECRV and VLCVX. And there's the bribes. It's actually quite interesting that there is a couple of bribes. It's good to see. A couple of $1,000. And these are small numbers of votes. Like, look, I have 10,000. I didn't, I messed up my delegation, but I would pretty much capture half of this, which is nice. I look forward to maybe this pulling back a little bit. Maybe like $1. This pulls back to $1. Maybe I'll carve out another little bit. Excuse me. What about Ren V2? Do you have any thoughts on their pivot and on chain? Listen, Ren, my opinion regarding Ren is the same as has been since 2020. I have them. Those are powerful pieces of technology, of software. They're nodes. There's a fixed quantity of Ren in circulation. The only purpose for Ren is to bond to create a dark node. And the dark nodes have a network, and the network they're going to build. They already have the collateralization process, the the security and the custody process, and they have a goal of disintermediation and the FTX backing, and and they're responsible for a good part of all the liquidity in the crypto space with RenBTC. And with what they're talking about with catalog finance, this is big stuff. Is it a good opportunity? I have no idea. I have no idea whether something's a good opportunity or not, but what I know is Ren, the price is an absolute mess. How do you buy something like this? Price is horrible. Great technology does not necessarily translate directly to great price action. Man, this thing got beaten up. Would it tempt me to sell? Hell no. Why? Because I want the nodes. The nodes are operating. They're doing what they're doing. They're cranking out 25% of the money. Pure Bitcoin. Pure Bitcoin revenue. Not even wrap Bitcoin. It's just pure Bitcoin. You do a claim and you get Bitcoin to a Bitcoin address. So that's powerful. Raul, regarding KeyDAO, also staked for some months now, but I just don't get the numbers you're talking about. Best case, 25% APR in a good month. You also vote where you get some extra weekly. So I don't participate in the voting because it's not a really organized process, and that's really what's nice to see about Hidden Hand and Aura coming right off the bat with a consolidated voting interface and incentives experience. So I don't do that. With regard to QiDao, I mean, I just see that with regard to my numbers. Like I see, I have X amount of QiDao, 162,000, and it just produces. So every month or so, I get like two grand. So that's basically all I was saying with is anecdotal observation. Oh, let's go back here. So I like to see that. I'm not going to complain about a couple $1,000s a month, and I'm not going to really dig into it too much because I don't think it's the best opportunity. I think it's out on the risk curve, and I'm not a fan of going out on the risk curve. But I had a cheat out position that was it was a $1.50 at some point, $1.70, and I watched it go down because it was locked. It was a vote lock position, and I watched it go back up, and all the while it has survived. All the while, it has been producing cash flow. So, from my perspective, measuring from the bottom, I'm content. I see it as a productive asset. And it performing as it has performed over the last couple weeks, it has a chance to survive. I couldn't exit the position if I wanted to. Dennis, do you think that was the bottom or is it more pain likely? So, two things come to mind with regard to macro. You know, Jeff Snyder really highlights well that something is positioned to completely break. And there's very much a high, there's no such thing as what someone thinks, there's only likelihood. What are the odds? The odds are something significantly breaks. The odds are that we don't enter a secular bear because I don't because I like Luke Gromen's ideology, and I don't think the financial system can handle a secular bear with regard to the amount of debt in the system and the servicing costs that the U.S. has on the debt as well as the entitlement obligation. So I don't think the system can handle a secular bear the same way it did over the last 100+ years. And to understand more of that, you listen to Luke Gromen and see the way he talks about it. And frankly, it's even Brent Johnson. You know, they see the same destination, just a couple of different paths to get there. So there can be very much a lower low. So what do I know? I know that we just had a massive liquidity flush. We just had 3AC and Celsius and Voyager and BlockFi just completely explode. So that was a massive, massive flush of leverage. So we just had a very big low. And what we're seeing is a bottom, which could be obviously just a bear market rally or a bear market bottoming process. I don't expect, there's no way we're heading into a bullish continuation. There's absolutely no way that is remotely possible unless the Fed pivots. So a lot of the bullish stuff that people talk about is it's so bearish that it's bullish, meaning it's so bad that the Fed's going to have to pivot. But if you listen to the right people regarding macro, they're sticking to they're sticking to their game plan because of how bad CPI is, and it's going to be wild. We're in very uncharted territory, and if they're forced to pivot on monetary policy, it's really bad. It's really bad. Like it could really, really get inflation, CPI inflation, in a really bad position. Not that we're not in a bad position right now. It's horrible. So this goes back to Dennis. You're saying, is this a bottom? This goes back to proper portfolio construction. You need cash. You gotta have cash in a good time and a bad time. You need cash to be able to pay your bills, and you can't think of crypto as just a traditional investment. And that's what I've been trying to teach and trying to wrap my head around over these years. And that's why I love the damn business modeling. You have assets that pay you cash on the weekly. That needs to be kept in cash. That needs to be sold and kept in a stable coin like a USDC. And you got to think of that as a salary. And that was your income. And now you think of it as cash in a bank account. What do you do with cash in a bank account? You either collect cash and you have a little bit of cash savings. You either pay a bill or you go out to dinner, normal shit what you do with cash, or you invest it. But you don't invest everything because you need cash just in case. Just in case. Never invest everything. Never go all in. Same thing applies to cash. Cash is just an investment. Oh my God, Badger, one curious few. Yes, they are. And Citadel's still on the table. So look, we're in a bearish market. We've seen a fair amount of shit survive. And look, bear in mind, the stuff we're talking about is the stuff we've talked about even in the bullish market. So on this stream, we've made some good observations. So many people have lost everything, going way out on the risk curve with some bullshit, cranking out 2,000% returns. It was absolute garbage. But look at the stuff we've talked about. Almost everything, almost every protocol we've talked about has survived, is not zero, is likely to bottom at some point, and it's likely to remain. Even Rook, powerful technology, horrible investment. Bancor has proven to be still powerful technology, yet a horrible investment. Bancor is going to survive. They'll survive. Still not a good thing to buy, but that's another story. But the best thing that I've held on to is the curve position because it's been productive this entire time. They talked about CVX great unlocking. Yeah, Spada Boom. They're very smart. So the Badger team is very, very smart. And they've built a heck of a federation for Citadel. The federation is the biggest thing to come out of the crypto space since 2020. These federations, these organizations of protocol that trap liquidity, that cycle the liquidity between the protocols. It's a balanced trade deal. There's a reason for one protocol to accumulate the assets of another protocol to influence the capital to flow out of the protocol to another protocol for an opportunity and then back into the protocol for whatever reason, for further opportunity. So there's velocity. The cash is circulating. It's a balanced trade deal. So these protocols have good monetary policies. The monetary policies are not hyperinflating, where hyperinflation would mean excess supply, so it gets sold, and it's an unbalanced trade deal. So all if in a hyperinflationary scenario, all the capital is flowing out of the protocol, and not enough is flowing back in. So you need the balanced monetary policy, so you have the balanced trade deal, so the capital flows out to take gains, and the capital flows back in to pursue opportunity. And that's what's happened with Curve because of the federation. The capital's flowing back in. Balanced trade deals require balanced monetary policy. That's one of my. It's a little bit divergent from the rest of the points, But that's what that last one is. Balanced trade deals need balanced monetary policy. So when you have a federation, you need a good monetary policy so the capital outflow, where profit is taken, is balanced such that capital flows back in to pursue opportunity. Outflow, inflow. So the sovereigns have fucked it all up. There's no balanced trade deals. There's no balanced monetary policy anywhere. But a balanced monetary policy facilitating the balance in the trade means the asset should be flat and should trend upward over time as more people see that the balanced monetary policy is creating that circulation of capital, that churn of capital. And what we want on this stream is to get exposure to that churn of capital. Because as that capital churns and as people out there in crypto and meat space are pursuing opportunity, we get a piece of that capital churn. So we want to own the infrastructure that facilitates millions of people trying to get exposure to all this opportunity manifested by the capital churning between protocols that are metaphoric to sovereigns that have balanced trade deals and haven't fucked up their monetary policies. Hope that helps. At least that's the way I'm thinking about it. Tom Weber's in the house. This the captain. We got a captain in the house, boys and girls. Just saying, just saying. Hey, Tom, how are you, my friend? Stargate shares revenue with STG holders now, do they? I haven't kept up with governance. That's interesting, Mr. Nobody. Huh. Yeah, it's not serious, but hash. This may help Hashflow. I don't know how they're handling the pools on Hashflow versus the pools on Stargate. I don't know the significance of that from the implementation perspective, but that's very interesting. What's important is the price stabilizes. If the price stabilizes, it means they've balanced the monetary policy and it's not too much inflation. And also, the cash flow that's surfaced as a revenue is enough of incentive to encourage persons to not liquidate their position. So I'll keep my eye on that one. Did Cash Hoskinson speak to Congress on crypto regulation? Listen, everyone might have their opinions about Cardano. He's extremely smart. He's very, very, very well spoken. And the software he's built is extremely impressive. In the end, it's just another blockchain network that may or may not have better properties as compared to all the other blockchains. It's just another blockchain, which means it has properties that are comparable to the other blockchains. And I originally said a couple of years ago that we'll end up seeing, a basket of protocols that corporations will choose to use depending on the properties. This is back in my Digibyte days. And Cardano's just one of them. And look how many have emerged over the years. If you look at multi-chain, they have 53 integrations. So that's a heck of a basket of protocols, of networks that corporations and sovereigns can choose to use depending on the properties that they see, that they're like, oh, this is good, let's use this. So Cardano's just one of them. So I actually have a very high opinion of Charles. He's extremely smart and well-spoken. Joe, yeah, yep. Pays in USDC. Biffy is my favorite revenue sharing opportunity. It's not a farm token. It doesn't pay out LP position that dumps a token. It pays out strictly to Biffy stakers. Yeah, I don't have the URL, but Beefy Finance, what is it, just pure cash flow? It's just an aggregator? Whether Biffy is good or not is another story. You'll be able to tell us in a couple of years whether it turned out to be a good investment or not. But Beefy should be around. It's just an aggregator. So they've actually shown great resilience and effective, sustainable technology. And that's good to see. I remember earlier in 2020, early 2021, I used to say I hated these names, the meme names and these wild names. And as we got to like later 2021, I started saying like, There's a lot of them that are actually really good. And these are great examples. Like, look at some of these names, Beefy Finance. But it turns out they've done quite well. Good investment is another story. Um, Good to see you grinding and educating through the bear. Keep it up. Dirty Sanchez, we're not going to stop around these parts because I got to figure out these markets too. So I might as well figure it out with all you guys also. Renner talking about going token inflation. I have no idea what's going to happen. One curious few. I know that they're extremely smart. Um, but we'll see what happens. Clearly, Rook didn't turn out to be a good investment. They've done a lot of pivots, whether the asset appreciates or not. I just you can't be exposed to too many assets, and then we go back to portfolio construction and position sizing, how we handle the evaluation of something to add to the portfolio. They could be a token, an asset, or a technology, a protocol that's so exciting and tantalizing and tempting, but maybe you have too many assets in the portfolio already. Maybe you just can't have it. You can't own everything you want to own. Don't forget about that. Any interest in Arbitrum? Sure, I have interest in Arbitrum and ZK, whatever, and Optimism, obviously. This is big stuff, big stuff. Dan, what is Balancer's value prop? Curve Federation. That's basically Balancer's value prop. Um, that's the bottom line. Balancer's Sun. Balance has been around quite a while. But their value prop is basically a version, an AMM that has more than two assets in a pool. So they have an innovative curve implementation, the way they balance the pools, and they've strapped on a monetary policy, and they're trying to commoditize inflation just like Curve. So, we'll only know in hindsight how well their ideas play out. So they're on the radar now, especially with Aura performing a convex type functionality. And I told you guys what the position size they carved out speculatively. The Aura position is 10% the size of convex, so it's about 1.5, 2% of the portfolio. Very small position. Same for VE Bow actually. Um, more pain to come, yeah. Well, we'll see. We'll see because I don't think the system can handle a secular bear market anymore. But Jeff Snyder's Eurodollar work definitely indicates there's a likelihood of more pain to come. That's a heck of an ABC correction, though. If you zoom out to the weekly on the Nasdaq, this is a massive, massive mean regression to the 200 EMA on the weekly. And the last time we saw this, look, the last time we hit the 200 EMA on the weekly was March 2020. These are massive, it's a massive mean regression. So we'll see. It comes down to the Fed. When they start cutting and they start stabilizing government debt, how they handle QT and QE. It's all about them whether we see markets go up. They control the markets, period. So more pain to come entails how much pain can the markets withstand until the Fed is forced to change their stance considering the CPI narrative. That's will tell us when there's bottom. The markets have to get so bad that the Fed pivots. But then there's also the argument out there that the markets get so bad that the Fed pivots that even with QE and fiscal spending, the markets still collapse. That's a narrative that's out there. We'll only know in hindsight. Shisha, yeah, but you made some horrible calls too. Solidly was fucking horrible. Solidly was probably one of the worst calls. Multi pivoted with the VE. Yeah, multi. I think I had gains on multi, but I sold quickly. Multi wasn't the worst call, but solidly was the worst call because I was loving the technology. I was loving Andre's white paper, and it's still a breathtaking series of Medium articles. He fucked up the protocol so bad. What a tragedy. Shisha solidly was the worst investment I ever made. And I will never make that mistake again. I will never deploy capital in that size again to something that is not tested. That was so bad. Oh my God. And I hope too many folks didn't follow me down that path. I lost so much money on that goddamn protocol. Horrible. Yeah, you're damn right I made horrible calls. But measuring from the bottom, I'm quite satisfied, and I can't hate where I am at the moment. I must be humble and appreciative. HB as the capital churns sounds like a daytime. As the capital churns, we just want a piece of the capital churn. You damn right, it sounds like a drama. um, well, Dan, it's not about force. I'm not. I never told anyone to buy anything. I don't. I don't even tell myself to buy anything. What I talk on the stream is very different, obviously, than the other YouTubers. I talk about the technology. I talk about reasons not to buy. I talk about portfolio structure and portfolio balance and how much risk people are taking, and cash positions. So it is good. There's reason to be critical about. I don't really make calls. That's really what I like most about the content and how I produce it. It's more of a discussion and analysis, observations about the synergies between protocols and how to evaluate the protocols, and that's the deal, my man. So it's all good. So I appreciate the observation, Shisha. Sure, I made not horrible calls, but I made some freaking horrible investments. That was really bad. And in retrospect, in hindsight, I didn't listen to my own freaking rules. And that's exactly why they turned out so bad. Got to follow my own rules. Fran Corp's in the house, a pleasure. Dom, couple more comments. We'll wrap up the stream in a couple minutes. Out of work early. Glad to catch you live on my way home. Thank you for all the rationality, Captain. Just finishing reading Market Wizards, and everything we talk about was in there. That's cool. There's few people that have a very similar narrative or topics of conversation that I offer, and if you find them, they'll probably be very they'll sound the same. So that's very interesting. Market Wizards. Y'all been keeping an eye on Joe as well. They're not expanding to Avalanche subnet, so if those take off, what a big value prop for their chain. Trader Joe won't grow enough, in my opinion. Yeah, it hasn't caught doesn't catch my eye enough, and I don't want to diversify. I don't have enough capital to take on a new large or a position of size that I would like to take on, so I don't. And I tend to focus on my core positions, which in hindsight were good choices. Kaysen, the interesting part of eBAL is 20% ETH component since you lock 80-20. It's max 1 year. Yeah, it doesn't catch my fancy too much. DeFi Django, I too lost about 4% of the portfolio, and solidly, that was horrible. I lost more. I think I lost 10, 12%. I went too much in size into that position. Absolutely horrible results. Fucking Andre. We all have to own the error that was solidly investment. What a tragedy, bro. Horrible, Dan. One Curious View. Enjoy the weekend. Thank you very much, everybody. It's a Friday. I wish you all a good weekend. We'll be back Monday. You know the deal, 3 times a week. Friday, June 24th at 12:37 p.m. Thank you all for joining. Tell everyone to subscribe. If we could help one person, that makes all the difference. The drill. After party on Discord for the most rational community in the entire crypto space. Love all you guys in there. Once again, wish you all a wonderful weekend. I'll see you on Monday. Peace.